Hey guys, Kill Stokes here. In today's video, I'm going to share with you a discussion from our live trading room about trading strategies becoming obsolete and how big banks take advantage of retail traders. Now, before we hop into things, I want to remind you we have a free trading workshop starting soon, November 14th. It's 1 week. It's online. It's 100% free. I'll put a link below the video. That way you can sign up and take part. All right, enjoy. And if you have any questions, leave them below. Zach says, Kill, have you found that any of your strategies based on structure or patterns have become obsolete over time due to market conditions and or bank decisions, BOJ intervention, COVID, etc.? No. You have to adjust and be fluid as a trader. So you have to learn how to make adjustments in the market. But no, not obsolete. I mean, the honest truth is that the markets move the same way. They've always moved the same way. They'll never stop moving the same way. They'll move the same way in different ways, if that makes sense. But they always move the same way. The general principles, especially if you're a structured trader, like if you're like a systems trader that maybe trades like moving average crosses or something indicator based, I tend to hear about those becoming obsolete, and that may have something to do with more people flocking to them, and the more people that trade a specific strategy, the less efficient it becomes. The worse the performance is, because the institutional traders adjust to it, right? They adjust just as much as us, right? I mean, again, the institutional traders, right? Their job is to use us for profit or manipulate us for profit. And again, manipulate's not a bad thing. They're not like going into our account and hacking it and taking our money, but their job is to understand what we're doing, because if they can understand what we're doing, they can use us as their puppets to make themselves money. So they catch wind of trends pretty quickly, right? If everyone's trading this moving average cross where 50 moving average crosses or a 20 crosses past the 50 and everyone's buying, if it's this massive strategy and everyone's trading it, they're going to learn that strategy and they're going to learn how to take advantage of it. They're going to learn how to bait the market into. Here's what I would do if I was an institutional trader. Here's the interesting thing. This is going to flip your mind, right? Because they're learning just as much of us. Let's just say we have a simple strategy where I'm going to put on a 50 and a I'm going to put a 50 and a 20 moving average, and we'll think like the bank for a little bit. So let's say there's a super magical strategy, and yeah, this is just an example. Like, things are not this simple, but let's say that there's a super magical strategy. Every time the 20 crosses the 50, that is your buy signal, right? And let's say this is being sold on the internet, YouTube ads, everyone's doing it. It's a prosperous time for traders. Guess what I would do? Or let me ask you guys this before I go on. What would you guys do as an institutional trader if this were the case? What would you guys do? Here's what I would do. So as soon as the market gets here, right? So let's say I'm an institutional trader. What do I need? I need this to be here. Okay, there we go. So here's what I would do. Let's say I'm a bank. I want to sell, right? So if I want to sell, what do I need retail traders to do? If I want to sell, I need retail traders to buy, right? Provide liquidity, right? So here's what's going to happen, right? This is exactly what I do. It may kind of freak you out a little bit, but this was another interesting journey I went on in my trading career where I learned I don't know how they do it. I'm going to be 100% clear. I don't know how they do it because I've never been in that situation. I've spoken to institutional traders, and the ones I've spoken to are sworn to secrecy, so they can explain what they do, but not necessarily the specifics of how they do. It's probably something where, like, someone will like come to their house and like kidnap them and stuff like that. I don't know. I don't even want to get into that. I'm probably saying too much right now. If I'm not here tomorrow, guys, you know why. It's like that one time I did the lesson on avoiding taxes, and then I was out sick for a week, right? Then I came back on that episode with how you should always pay taxes. Came up with that story. While I was sick, guys, I had an epiphany. You should actually pay your taxes. In fact, when you pay your estimated taxes, pay a lot more than you think. Give Uncle Sam that interest-free loan. You might get it back. But so here's what I would do, right? If I'm on the side of the bank, and I think it's important to think like this. I think if you can think, because again, we're not going to beat institutions. right? And that's not our job. If they are the elephant, our job is to be the fly that circles around the tail, right? And our job is to circle around that tail. And when that elephant starts to move, let's just grab onto that tail and go for a little bit of a ride. Our job is not to fly in front of the elephant and hope it goes. No, so we didn't know our role in the markets. I think a lot of people think our role is to beat the markets. No, it is to join in on the profit making. As they take a lot, we take a little, and then not do dumb stuff so we're not victims on the other side. But we have a move like this, right? So if I'm an institutional trader and I want to, what did I say? I want to sell, right? I need retail traders to buy. So if I know that everyone is locked into this magic 20 crosses 50 moving average, I'm going to purposely push the market up so I can get that average, that moving average to cross, right? Because once it crosses, what am I triggering? Once it crosses, what am I triggering? Once it crosses, I'm triggering all those buys from the people that are using that strategy. And again, in this example, we're pretending like the whole world is using it. Now, so I know that once this happens, once I push the market up a little bit, and this is what they do already, they'll push the market lower to test and probe and all this fun stuff to bait us, right? So this is not out of the norm, right? Once the market is pushed up, and I can convince all these retail traders trading this magic strategy to buy, this is what's going to allow me to get my sells on. At a cheaper price, by the way. At a cheaper price. And then what do, right? I don't know if this example is going to show it, but what I would do here is, so we start selling, right? As we sell, right? Let's see if this thing actually goes down, right? So let's say the moving average crossed earlier, right? But as we sell, how do you think these buyers feel? You bought right here, right? You bought right here. You bought right here, price pushed up a little bit, and then came back down. What are you feeling right here? Are you feeling scared? Are you feeling nervous? Are you bailing on your trade? Are you feeling pain? Most traders, when a move goes against them, they either lose confidence, they either get scared, emotional decision, or they feel pain because sitting there looking at your money get flushed down the toilet isn't fun. And it's our natural instinct as humans to, one, get ourselves out of positions that feel bad into positions that feel good. Two, avoid pain and move towards pleasure. So if we're in a losing trade and we're dealing with all this pain, how do we get out of that pain? We exit the trade, right? So all those buyers that got scared out or realized price is going wrong or in too much pain, they then become sellers, right? And either they are sellers simply to exit their buying position, or they are sellers looking to, what else happens when you lose a trade and you're emotional and you want to get money back? You revenge trade, right? You guys have done this before. Where you lost a trade, it's going against you, and all of a sudden you flip from a buyer to a seller. So you have sellers that are just exiting positions. You have sellers that are now getting involved because they want to make their money back. Either way you look at it, and you got institutional sellers as well because they originally sold up here, right? So any way you look at it, we've just flushed the market with sells. Flushed the market with sells, and that pushes it down. And not to mention, if we push it down to where this moving average crosses back again, guess what? We have a whole bunch of new sellers from that magic moving average strategy that are now entering on the opposite signal. Do you see how that would work? This is why nothing like that lasts forever. Because as soon as who's in the know catches wind, they'll use it against you. So you have to adjust and adapt. Scary stuff, right? And again, I'm not saying this is not an actual strategy. This is something we just picked out of the water to give an example. But imagine that with different strategies you have, especially with your indicator-based ones. That's exactly how I would play it against you. Oh, I know you're going to do this? Okay. I'm going to push you into position to do this. And then I'll do something else. It's like them baiting you into a that sports bet, like them baiting you into a good spread, only to be like, surprise.